Hey guys, it's Monday. Let's take a quick look at market action. Not a whole lot of new fundamental news going on, at least nothing that wasn't expected or that we don't already know about. So today was just good old-fashioned buyers and sellers pushing futures markets around, which really gives us an indication of what's going on. And here is new crop soybeans, which showed a little bit of follow-through strength that came after this hook reversal here on Friday. Notice where we are. We're coming right up into the sweet spot, which would be right on top of our hedge line, which gives us an opportunity to resell or get short. This is also a nice area because we're trading right around the 38.2% retracement level of this wave of decline right here, and the 38.2 of this move, which is just a little bit higher, comes into play kind of right between this 50% mark in here. So anywhere above this 1280 level, up to 1293 or 13, really above this low right here, is a good, nice area to get short. Presents a nice risk reward where you know where you're wrong and you can sell it. For those of you that did see the video, Jeff did a nice job of explaining what we did with new crop beans on Friday. You know, when you're hedged, you want to just stay hedged, and the only thing you want to do is really make some trade modifications occasionally to try to capture some upsides while maintaining downward protection, which is exactly what we did. On a little bit more strength here, we'll probably look to sell more beans and increase our marketing levels just a little bit, because nothing's changed from a supply and demand standpoint. We're still expecting lower prices off of bigger carryouts unless and until we see something that changes that. And makes us think we're going to have a short supply crop and that we would need to go higher. So new crop beans, welcome rally, and we'll sell it again maybe as early as tomorrow, but we'll see. Old crop beans, really no different. You can see we've retraced just a very small piece of this. Let me flip this so it's not on the reverse side here. We've come almost back to the 38.2 retracement level, not quite, right back into this nice sell zone right in here. I don't think we're going to take back this big day's high at 1439 3/4. I really think that's going to hold, which is also this low right here. So I think both of those levels are going to offer the resistance to the market, and so we're going to be selling it into that, and we have a nice exit point right here. And really, if you put the daily cloud on top of that, you can even risk it all the way to 1462. So what we may do is, especially for guys that have bushels left to sell, and even as specs, what we'll do is take long call positions against short futures, expecting to move all the way down to 1340 or potentially even lower. And we can look at that by drawing these retracement levels. We'll draw this off of here. And as you can see, we would be looking for this level here to fall and ultimately give way to 1339, 1311. So we're looking at a nice risk reward versus the premium for calls against the top of the cloud, where we have multiple places to know that we're wrong, and we can pick up some gains from that position, but not quite yet. We want to see a little bit of more up tomorrow, and then probably be met with selling would be our guess. Okay, here is corn. Corn had a second day of buying, leaving what's called a bullish engulfing shadow here. Oh, hold on. Before I get into this, I want to jump back to wheat and talk about Friday's close. Friday's close was an outside bar, triple close, key reversal pattern, which is typically pretty bullish and could propel it just a little bit higher. So, but I think it's probably going to suck people in, and you're not going to be comfortable selling it because it's going to show strength, and you're going to have this move fresh in your mind. But the odds of it doing the same thing here again aren't really very high, and just because it happened here last time doesn't mean that that's going to repeat itself. So you're still coming into a nice defined risk reward setup where you have nice upside potential with limited risk if you use calls or stops. So we don't want to be blinded by the recency of this action, and still have the courage to step in and sell that. All right, corn, really very similar thought process, right? We didn't have the outside bar double close or triple close key reversal that soybeans did, but they did have a hook reversal. And today we have a bullish engulfing shadow where we failed to really break the high, but we did do quite a bit of interesting damage here on the with the full bodies of these clouds. So the full body is the green bar, which represents the open and the close, and on a red bar, this is the open and this is the close, and this solid shaded spot is the full body. And anytime you have a shadow, which means we traded in this area but we were unable to hold it, that's a bullish engulfing shadow. You would expect a little bit more bump into that. Now, as far as this market goes, we are not expecting a tremendous amount of upside here. Actually, well, hold on, let's do that again. So if we put on relative retracement, we see that we hit our 1382 extensions from this move here. Okay, so we found a little bit of support right at this extension level. So now we're rallying back up into the move, which gives us an idea that we are trading up into this 38.2 mark, which is right here. So if you look at this bar's high and this bar's low, I doubt that these give way. In other words, I think that this magnet level, our hedge line, and this low right here is going to hold, and likely this is an area which you'd want to be short. It also ties up nicely with the magic $6 number, which ties in nicely to these lows back in here, which means you probably want to get short or sell this market ahead of that and expect lower prices to come, because I don't think that we're done. I think that we're probably headed closer to the 530 level, even though we're getting a little bit of strength in this old crop corn contract. I don't think that this rally is one that's going to reverse course and send us much higher. So wouldn't be a buyer here necessarily, but would be looking to be an eager seller if we get any more strength up above 590 to 6. We'll see how many people are thinking that way by the price action that's coming up. All right, here's new crop corn. Well, where is my new crop corn? I had it. There it is. Okay, here's new crop corn. Just kind of fallen out of bed here recently, right? But we do have nice long shadows down here showing a little bit of selling exhaustion right at the 520 level. And this is coinciding nicely with some Fibonacci target numbers that have been in place. I don't think that we're going to turn around and get a big uptrend in place, but we could see a little bit of sideways consolidation and up. Notice that new crop corn has no interest in participating in the upside movement like the others have, and that's just showing more and more weakness, right? Maybe that's better planting weather, drying out in the north, and implying less PP and more acres planted. I don't know what the root fundamental cause is there, but the reality is this contract doesn't seem to want to have anything to do with it. So this is steep enough. We would expect maybe a consolidation and then more decline before this move is done. So I wouldn't be hesitant to go ahead and put more hedges on if we do get any kind of a bounce in new crop corn, because lower we go. Remember, the market looks like this, and the reason it looks like that is because, or it looks steep, and the reason it looks steep is because we're getting ready to plant what the USDA says is 92 million acres with a yield of 181. And so when you do that math and you put it against our demand, we grow our carryout from 1.3 billion to almost 2.5 billion, or maybe more, depending on what the USDA does with exports. So the expectation here is for much higher end usage, or much higher ending carryout numbers, which would be lower prices. And if we do go closer to the 2.5 billion to 3 billion mark, then 5 is not going to hold December corn. It's going to trade significantly south of that. And I don't know if 475, 450, 425 holds it, but something much, much lower. So I don't know if that happens all at once, but certainly once the market becomes comfortable that it has those bushels available to it, then we would expect it to fall away, which is the same thing we're saying in beans too. Okay, so let's talk about wheat, because right, it's got actually some bullish fundamentals. Data is now out showing that wheat is actually picking up on some exports, and we're actually ahead of pace a little bit. But we know that the Kansas City wheat crop is basically a failure, right? It's a disaster because we have the worst conditions or one of the worst conditions that we've ever had, but yet we just are getting pummeled to the downside. And today this low did give way, which is not bullish in and of itself. But what we do have is a little bit of support coming in at the end today, along with corn and beans. So if Kansas City can rally much at all, it may trend sideways more so than the others, just pending its harvest and some confirmation of what its actual ending stocks might be. The move may be finished up here, or maybe very near that on the Kansas City market until we get something a little bit more definitive. So I'm not too worried about this one at the moment. I think the bleeding there is already done. I'm much more worried about corn and beans. And so that leaves, kind of the other alternative, which is if corn falls out of bed, then what will Kansas City do? Won't it go with it? And I don't know the answer to that. It might not. You just have to wait and see just how the harvest starts to unfold. So more neutral wheat today, even though it is in a downtrend. I definitely wouldn't jump on it and start selling it at this level based off of what we're seeing right now. Okay, that's what I got for you so far today. Hope you guys have a great Monday. We'll talk to you again Wednesday, and if market conditions warrant it, we'll talk to you again tomorrow. Have a great night. See ya.